Okay, guys, welcome back to part two of my interview with Michael Saylor. You guys didn't see this, but in between these two recordings, I got a third laugh out of him. So 3 for those of you counting at home. And thank you for the the 2 pity laughs. I really appreciate it. The audience really loves it when you laugh at my jokes. Okay. This is 3. Somebody clip this one.
Go,
okay.
go. I'm having so much fun.
Yeah. Guys, here, like I said in the last interview, we start off with, we're asking all questions from the community, all questions coming from Twitter on a post I made about this interview. And there's 2 parts to this question. Part 2, I already know the answer to. But part 1, I really want to know. So this comes from Guillermo Yoya, NFT on Twitter. He says, ask him where he's buying his Bitcoin from. And part 2, will he dump all the coins at the same time? I already know Michael Saylor is not selling any Bitcoin, so no reason to touch on that. But I want to know, how is MicroStrategy buying his Bitcoin? I assume you're not buying it from Binance or KuCoin. How are you guys adding, able to get so much supply?
We're a public company. So if a public company wants to acquire a crypto asset, we need to find a counterparty, like an exchange that we can vet, that we feel secure with. And normally the checklist would be, are they licensed in the United States, right? And the second checklist item would be, are they audited by auditors that our auditors trust? And the third checklist item would be, how do we feel about their security procedures? And then the fourth checklist would be, how do we feel about their business practices and their reputation? So, if you go through all those, you want an institutional grade exchange, an institutional grade custodian, and a jurisdiction. Companies like Coinbase and Fidelity, NYDIG, they would kind of check the box. We wouldn't trade with an offshore entity just because we need someone that's got the appropriate license in the US. And then there tends to be a pretty detailed process of getting comfortable with their back end operations and controls and accounting procedures and the like. So that's how we do it. And that's truthfully how any American institution, big public institution, would do it. They would do it through one of those bigger names. And if you go to my Bitcoin for Corporations conference, we posted on our website, we interviewed 8 kind of institutional grade Bitcoin vendors, and we talked to Genesis Trading, we talked to Fidelity, we talked to NYDIG, we talked to Coinbase, right? So I would encourage people to look there if they're interested. Regarding the second question, it's a simple question, right? Our strategy is to acquire and hold Bitcoin.
Right.
So what I think about Bitcoin and what the company thinks about Bitcoin is it's digital property. And what we love about it is it doesn't change. And it has a reasonable expectation of lasting hundreds of years. So our time horizon is 100 years. So effectively you call it forever, right? The difference between institutions buying assets and people is when a family buys something, they're thinking maybe they'll sell it at some point. But like when the Catholic Church buys something, go look at the Pantheon in Rome. It's been maintained by the church for 2,000 years. When an insurance company buys something, they're thinking I'll hold it for 100 years or hundreds of years. So same with governments, right? So when big institutions buy things, their time horizon is multiple lifetimes. And you're like, how can that work? Well, it can work because they exist just to exist, right? They exist to hold assets.
Yeah.
So that's what we're doing. And you're like, well, how can you not sell anything? Well, the answer is A, we're profitable, we generate cash flow. And B, if we ever wanted money to pay an expense, we would either generate yield with the asset, or we would leverage we'd borrow against the asset. We'd either mortgage it or we would generate yield with it. But the goal of an institution is to acquire more assets. At one point, the Catholic Church owned 25% of all the buildings in Spain. Right? We're acquiring property. We're not disposing of the property. And the big advantage, by the way, of a religion is no tax, no property tax, no income tax. That's how they get so rich, among other things.
Church of Scientology, with all their real estate buys all over the world, they own I think it's like half of Miami or something crazy like that.
But being practical here, right? The 2 big ideas. And this is a big idea. If you look at John Malone, a brilliant businessman, he did all these deals. He did TCI and he owned Discovery and all these cable companies. The whole point of the deals was always to be tax efficient. Like you never want to do anything that generates a big tax bill. So he was very thoughtful about that. You want to defer your capital gain. And so if you want to build a large asset base, there are two secrets. One, long time horizon. You buy something to hold it for decades. I think Warren Buffett's held Coca-Cola stock for 40 years, 50 years, maybe, right? No capital gain if you don't ever sell it. And so long time horizon is one. And then the second is be thoughtful about tax. If you were to buy $1 billion of property in Florida, you'd pay $20 million a year in tax. Okay, it's expensive to carry real estate in Florida. If you're going to do that, maybe you should find another state that doesn't charge you 2% a year, right? Or if with Bitcoin, the beauty of it is I can choose the jurisdiction where I custody it, right? So it's portable property, and then I can hold it forever. And if you have portable property you can hold forever, that's tax efficient property. At least theoretically, it's a lot more tax efficient than any other idea I have. If you buy a company like Apple, Apple's got a headquarters in California and they've got employees, and you're going to get tariffs. You're going to get California state tax. You're going to get employment tax. You're going to get corporate income tax. You see, you have domicile, you have a tax load. So, so MicroStrategy's strategy is long-term, buy, hold, buy some more, keep buying, not going to sell ever.
You would say that's the MicroStrategy, macro strategy.
That is our macro strategy. Yeah, and it's probably worthwhile for me to note, sometimes people on Twitter, they confuse the debt that we have with like margin debt. Yeah. If you borrow money on margin and then the thing trades down, you might get a margin call. But the debt that MicroStrategy took was not margin. It wasn't debt where we pledged the Bitcoin as collateral against the debt.
You can't get liquidated, basically. Yeah.
So Bitcoin could trade down to $1 and stay there for 4 years. We're still not getting liquidated.
Yeah.
Right. At some point, like in December of 2025, I have to, I have $650 million of debt that comes due. And if my stock is below $398 a share, I have to issue a little bit more stock. It's a little bit diluted, but you can see that it's very long-term debt, and it's not secured against Bitcoin. It's secured against the cash flows of a software company, or unsecured. And so we kind of have a lot of flexibility. Like we bought 125,000 Bitcoin, blended price about 30,000 a coin. It doesn't matter if Bitcoin goes to 25,000. Doesn't matter if it goes to 20,000. Doesn't matter if it goes to 10,000, except for the fact that I get beat up on Twitter.
I know.
Royally roast me.
Welcome.
I will get roasted on Twitter.
Yeah.
But other than taking a Twitter beating, right? But part of what we do as a company is we have to think very hard about our capital structure. You might have noticed, like in the third and the fourth quarter, we sold $1 billion worth of equity, and we bought Bitcoin with it. Yep. So we were basically taking in $1 billion of permanent capital, and equity in a public company like ours. That's like money that we have forever. There's no there's no cost to carrying it. There's no redemption right to it. There's no liquidation preference. We just took $1 billion of capital, bought Bitcoin, hold it forever, right? And that deleveraged all the rest of the debt, you see. So we try to be very thoughtful, right? If you're going to pursue a long-term strategy, you think about the mixture of debt and equity, and sometimes we'll issue equity. The first Dutch auction was an equity thing. Then a little bit more equity, then some cash flow, then a convertible debt offering, which is unsecured.
Yeah.
It's just really equity. Then a secured debt offering, which is secured against cash flows, then an equity offering. Yeah. And so at the end of the day, if Bitcoin goes down, it won't have been a good strategy. And if Bitcoin goes up, it will be a good strategy. But, just because we're using leverage doesn't mean that I suggest that anybody go out and they do leverage trades on a crypto exchange. The problem with that is that you could go to sleep on a Saturday night, it could trade down 50%. You get wiped out, liquidated, you wake up and it's traded up and you lost all your money. Okay. That'll never happen to us because we're not doing that sort of trade. But if you're retail, that's a risk. And that's why leverage is dangerous for a retail trader. and the wrong type of leverage. Mark to market margin loans are really dangerous leverage. Good leverage is mortgage, something for 30 years that is not mark to market for a cheap interest rate.
Yeah, I think when it comes to trading, I think that I did very well leverage trading last year, turned $80,000 into $1 million, and I don't really leverage trade anymore. Like I took my cash out and I said, okay, like maybe here and there a little bit, but it's the kind of thing where if you hit it big with that, you just got to kind of say like, okay, eventually I'm probably going to give it back, unless you want to make trading your whole life. If you want trading to be a full-time job, there are certainly people that can make leverage trading work, over the long term. But, if you're going to come in for short spurts of time, it's very easy to get wrecked. So I want to ask you, speaking of the price of Bitcoin, you mentioned if it went down to, a dollar for, 4 years, I know you'd buy all the Bitcoin if it did that. But the question is, when we go back and we look at, your buys, the MicroStrategy buys, there was a long period of time, stringing up Bitcoin through about $50,000 to where every time you guys made a purchase, it didn't go back down below that. That changed about halfway through the year, and you guys started buying Bitcoin, and then it would drop and it would drop. I want to know, this question comes from Kenneth Cahill. What are your opinions on a crypto winter now? He didn't think we'd see one previously. Like before you said, oh no, I don't think Bitcoin is going to go through like some big dramatic bear market. We may be in one right now. Just wanted your thoughts. Have they changed at all, with the price action that's occurred since May?
I think the first decade you saw these drawdowns of 80, 85%. And I think in the last 2 years, we've seen drawdowns that are like maxed out at 50% or so. Might have been a 55 or 53% or something. But the volatility is less. I think that the asset class is maturing. I guess, there are a lot of reasons why the asset class is volatile. The lack of wash trading rules, the extreme leverage, the cross collateralization, the security tokens, the 24/7, 365, the uncertainty, the accounting treatment, right? I could give you a litany of why it's volatile. I could tell you why it's getting less volatile, and that's as more institutional investors come in, and as their time horizon gets longer, it'll get less volatile, and it will get less volatile as more regulation comes. And ironically, a lot of things that people think are bad will actually be good for the asset class. Like if the House decides that they're going to implement the wash trading rule, and that means you're not allowed to sell something and buy it back the next hour, if that happens, a lot of fast money trading will be discouraged. Right,
that would be good. That would be good for the space, I believe.
That would decrease the volatility. Yeah, because like right now, if Apple stock traded down 10%, you don't sell 100 billion of it and buy it back in anticipation of tax harvesting, because you have to wait 30 days before you can buy it back. So Apple stock is less volatile because of that rule. But the cryptos don't have that rule. So it's like the tax law encourages you to sell whenever you have a loss.
Yeah.
Right. And that's kind of like, that's a green light for fast money traders to come. And they're like, since they should sell and they know you should sell, then they're going to make you sell so they can buy back cheaper. And so you've got some built-in structural incentives for it to be volatile. Do I think we're in a crypto winter? No, I don't think we're in a crypto winter. I think we're fighting through a lot of macro issues, right? Like people are uncertain about the degree and extent of regulatory intervention and what will happen. They're uncertain about geopolitics, be it either, Russia, China policy on crypto versus, Ukraine and the like. They're uncertain about monetary policy. Like they're like, oh, there's no inflation, so Bitcoin trades down. Oh my, there's massive inflation and the Fed's going to raise
so
interest.
Crazy.
So yeah. Bitcoin trades down, and so I think we're working through that. In the near term, you get beat up a little bit, but there are countervailing forces, and the forces that are taking the volatility away are regulatory clarity. It'll be a good thing, and every single one of these things that gets fixed will decrease. It'll decrease volatility, and it'll increase the value of the entire ecosystem. The second thing is all of these public companies, like public Bitcoin miners, as they come public and they raise capital, they're stabilizing the entire asset class. I don't know if you noticed, but Marathon did a big convert offering, $650 million a few months ago. And then just yesterday, I think they announced a $750 million ATM equity shelf registration. Other miners, you know, Hut 8 have announced another shelf registration. Riot did a $600 million equity raise. There'll be 24 companies that will be public by the end of the quarter. TeraWulf came public. Core Scientific came public with a multi-$100 million equity raise. Anytime a Bitcoin miner raises money, there's only one thing that's happening there, which is that means that that money is being spent either on mining equipment or it's being spent on Bitcoin. But ultimately, it's really being spent on Bitcoin, because if they have the capital, that's that much less Bitcoin they're selling. And so this whole crypto winter idea was boom and bust cycles and living through the 4-year halvings. But what happens is once half of the hash power of the network is public, I don't know if you noticed, the Bitcoin Mining Council is like 46% of the hash power of the network now. And most of them are, you know, not all of them, but a lot of them are public. As those companies come public and they buy up the private miners and they issue equity and they issue debt, then the amount of Bitcoin they sell decreases and the stock to flow increases, and the stock to flow eventually goes to infinity. And that means the available supply, you know, each day goes to a trickle, and that creates price pressure. So those dynamics that, are going to decrease volatility. If banks are able to hold Bitcoin on their balance sheet, like the big banks, they get comfortable, and FDIC guidance would be a critical catalyst there, then you're going to see a big demand. And then if you see companies like Silvergate Bank issued credit lines, if you have FDIC insured banks, they get a green light to do stable coins, a green light to get into crypto lending, then people that own Bitcoin don't have to sell the Bitcoin. If they don't sell the Bitcoin, instead of holding it for 4 years, they hold it for 8 years. If they hold it for 8 years, it's the same as the stock to flow doubling, you see. Yeah. So there are all these dynamics, like even the BlockFi settlement. Well, it's painful on one hand. On the other hand, if you have publicly traded companies, or in this case, they're not public, but if you have licensed companies in the US that are able to raise hundreds of millions or billions of dollars of capital to give you yield on your crypto, then you're going to have a lot more people think I should hold it, not sell it. Maybe I'll buy it, not sell it. And so the key to an asset class maturing is you either need to be able to rent it, like you need to rent your building, or you need to be able to mortgage it. And if you can put a mortgage on a house, you'll buy a house. And if you can rent that warehouse, maybe you'll buy that warehouse and rent it out as an investment property. And so as the entire industry matures, and as people can mortgage things and they can generate yield on things, and as the Bitcoin miners get public and have access to lots of cheap capital, then I think what you see is volatility decreases, the price increases, right? It's a very, it's a positive feedback loop, right? You know, self-fulfilling prophecy in a way.
Yeah. Well, I think this kind of goes back to the other conversation we were having about, you know, we started this part two of this interview off with was, you know, are you going to dump your Bitcoins? Like it's pointless. Like there's no reason to sell it at some point. It would be like if you own 7 houses, you know, it's part of your portfolio. Like, you know, you own that much, that's your net worth. Like, do you really have to go sell one? Well, if you want to do something else with the money, potentially you could, but that's part of your net worth. Like owning Bitcoin is part of your net worth. It's not something where you know, in the near future, you're going to need to cash it out to represent that. And I think that's, you know, that definitely, you know, says a lot about the volatility. Well, let's move on to this question, because this is an interesting question. You know, kind of to wrap up, you know, talking about MicroStrategy here. How long do you plan to work? Do you have any MicroStrategy succession plans? I don't know if we were going to see, you know, HBO Succession play out live, you know, on your show, but, or on your company, but, you know, are you planning, like, do you walk away at some point, or, you know, I don't feel like I'll probably ever retire. Like I'll just keep on working forever. But is there a point where maybe you want to do something else in crypto or Bitcoin? You know, have you thought about this? Other people are thinking about. Rich M on Twitter is thinking about it.
I'm having as much fun as I've ever had.
I'd imagine so.
It's a fun job now, and we've got a great team. And I think the key to making your job fun and rewarding is focus. You know, have some humility. Don't try to do too much. If I was trying to run 16 different lines of business at the same time and launch 14 more, it might get kind of stressful. But what we've got is the enterprise software business that we've been running for 30 years. And I think we know how to run it. And we've got a good team. And we've got a Bitcoin strategy. And it's not the most complicated strategy. I'm not out there trying to cross trade 47 crypto pairs and derivatives and build all sorts of technology. It's a straightforward strategy. So, you know, I'm 57. I think I'm good for a while. When I'm not good for the company and someone can do the job better, I will retire and I will leave the reins to someone more qualified than me. Yeah. But I don't think it's going to happen in the next few years.
Yeah, you'd have to probably move to like, I don't know, like boat model building. I don't know, just judging by your backgrounds. I don't know. You always got a nice boat back there. Now let's talk about, like we've talked about Bitcoin, all your thoughts on Bitcoin, phenomenal stuff. Previously, when you were on my show, you said that you felt like Ethereum and all the other altcoins were, you know, kind of basically like venture capital projects. And I really like the way that you put that. I've used that language a lot since that interview. It's a good way to explain to people kind of, you know, the difference between Bitcoin, because Bitcoin is its own classification. I want to start with, you know, one question about the Bitcoin market cap, and then I want to move into kind of the last question would be along the lines of you know, other altcoins you think might do okay. I mean, you mentioned metaverse. We'll get into that. Do you think Bitcoin has to stay #1 in market cap in crypto? Or if, let's say, Ethereum were to pass it, or, you know, God forbid, Cardano or XRP or something like that, do you think that would shake confidence in Bitcoin? Or do you think Bitcoin is firmly cemented in kind of its niche, that it doesn't actually matter if more market cap flows into another project?
Yeah, I think Bitcoin's crossed the event horizon. That is, it is universally acknowledged digital property, and the use case for digital property is certainly $100 trillion type market. And if you want digital property, you want something with a protocol that is so stable that 100 years from now, you don't expect any change. Even 1,000 years from now, you don't expect a change. I surveyed my Twitter followers, and on average, they think Bitcoin will be around for 3,800 years. Okay, so you want something which is a firm foundation that is not changing, and Bitcoin is really perfect for what it is. I think with regard to market cap numbers, the issue with market caps is if I have a very thin float, if only 1% of the tokens trade, then I can calculate a market cap, but that's not the same as the effective liquidity. What you really have to do is look at liquidity. And ultimately, I don't really think it makes sense to compare market caps to come to the conclusion. And even on a liquidity level, I don't think it matters that much. Like, for example, let's take Tether or a stable coin. They trade massive amount every day. If you go and you look, like,
for sure, yeah,
$40 billion a day. Okay, does that mean that Tether is going to replace Bitcoin? No. I think that the best way to think about this is there are different use cases. Do you have a digital exchange? Do you have digital art? Do you have a digital currency? Do you have a digital property? Bitcoin is digital property. It's not digital art. It's not a digital currency. A currency needs to be a medium of exchange you can transmit without a tax obligation in a compliant fashion. Otherwise, it's not a currency, right? So a stable coin can be a currency, you know, if the regulators tolerate it. That's a currency. All these things have their own different market, and they have their own regulatory dynamics and their own competitive dynamics. And if you segment the market that way, Bitcoin's really competing against like-kind proof of work networks that aspire to be digital property. And you could probably say it's like the forks, and you saw what happened with Bitcoin Cash or Bitcoin Satoshi Vision, and
Yeah.
they will be whatever they will be. And I think that if what you want is something that'll last hundreds of years, that's not going to change, then you want a Bitcoin because you value it. The fact that anything else launches and has a large or small market cap, or even a large or small liquidity, it's not going to change your desire any more than I own 10,000 acres and you own a cruise ship. And am I going to trade my 10,000 acres for a cruise ship? But there's different things.
Yeah.
Right. So that's what I think. I think ultimately the fundamental point to be made with Bitcoin, especially as it pertains to MicroStrategy, is I look at it, I'm like, well, what would I trade it for that I want more in 100 years? Like if your time horizon is 100 years, I wouldn't trade it for a stock in any company. I mean, you could give me Apple. I don't want Apple. I don't want Google, right? I don't want a building. I don't want a fleet of trucks. I don't want a bunch of diamonds. I don't want a stack of gold.
It sounds like a country song. I like it.
I don't want currency, right? I don't, you could give me all the Picassos in the world. I don't want them. Like I respect them. Fine. I'm not going to disrespect someone else that wants to hold Picassos. It's just not, it's not what I want. What I want is a non-sovereign synthetic asset, which is a commodity that I can move anywhere in the world, that is 1/21 millionth of all the energy in the network. And that's what that is. And so if you understand that, you understand it really is, it's competing with other bearer assets. It's competing with bonds and monetary indexes and equity indexes and real estate held as a long-term investment. Whereas, the other cryptos, they're competing with platforms and exchanges and banks and, and there are better ways to do things that have been done inefficiently. Right. And they all they've got a different vision, a different mission, a different set of competitors, a different set of risks. And if the reason I say it's venture capital is you want to be in that business, you got to think like a VC, and you got to be able to decompose and analyze all the risks and all the competitors and decide whether or not that risk reward makes sense for you, right? We're not venture capital as a MicroStrategy. I'm not a trader. I can't give you trading advice. Lord knows I bought Bitcoin at all-time highs and lost money. But like last week, I bought it at 37,000 and it's up. But like the day after I bought it, it might've been down. It's like that stuff happens. Yeah. I'm just a little engine that could. We're just going to keep dollar cost averaging as long as we can dollar cost average. And I don't want to give anybody advice in an area. I'm not an expert. I'm not a venture capitalist. I'm not a speculator. I'm not a trader.
Well, I would say you are certainly a Bitcoin expert. If you're not a Bitcoin expert, then I don't know who is. Anybody who's more of a Bitcoin expert than you.
I give you advice on Bitcoin. I give you advice on Bitcoin, and my advice on Bitcoin is follow your Bitcoin.
Yeah, exactly. I mean, you can't go wrong there.
There you go.
Well, just last question, kind of to wrap up what is right. It's kind of along the same lines that we've been talking about just briefly here, though. If you've already stated your claim, Bitcoin is where you're at. You're trying to corner the market. Out of all of the other cryptos that are out there, you did mention like there's some metaverse stuff that you think is probably pretty interesting. Is there one coin out there that just like it interests you at all outside of Bitcoin? Not for investment, but just
Bitcoin is my first and only love.
There you go. That's it. You heard Michael Saylor. No other cryptos interest him. Bitcoin is his Valentine. Well, Michael, thank you so much for joining us today. This has been such a great interview. I always love when you come on the show. Everybody, you can find you on Twitter. We'll put all your links down below. You don't have just search Michael Saylor. You'll find him for sure. And we'll put your Twitter link down below so people can go check that out. And everybody, drop your comments down below. I want to know what you thought the most fascinating part of this interview was. Michael, thank you so much for coming on the show. Look to have you back on again sometime.
Always a pleasure. Thanks, Ben.
That's right. Be blessed. BitBoy out.